So you want to buy a home. Well, that's awesome, but you have no idea where to begin. That's okay, because I'm about to walk you through step by step everything you need to know about getting started. And everything about the purchase agreement you fill out when making an offer on a home. Before seeing homes, you need to get pre-approved for a mortgage. Unless you're paying cash, in which case, good for you. Most realtors though won't get anything really started until they know that you're pre-approved or you have the cash, again, good for you. And that really wastes you and them from wasting any of their time. Now to get pre-approved, don't just go with your bank because you already have an account with them. In some situations, it's okay, but you really need an experienced loan officer who runs their own business, who holds themselves personally accountable. Trust me, I've been on deals where the loan officer didn't. It's bad. Someone who will take the time to make sure that you understand everything, look at multiple scenarios to find the one that makes sense for you, and someone who can work quickly. Once you're pre-approved and you know your budget, then it's time to connect with a realtor, if you haven't already, and get your search started. It's time to figure out if what you want in a house and location aligns with your budget, and if not, what has to change. But let's assume that it does, and now it's time to get started searching. Now every house is going to be a little bit different and may have different factors to consider when making an offer and how it'll best appease the sellers. But here are the main parts of a contract that you need to know. First is earnest money deposit, or EMD. This is money you put down with your offer and tells the seller, hey, I'm serious, I'm putting this as collateral, and if I screw up and void the contract for any reason, you get to keep it. I generally don't like to do less than 1% of the sales price, but typically the more you put down, the more serious it shows you are. And pretty much everything I'm talking about after this is all about protecting that earnest money deposit. If you screw up and void the contract for reasons that aren't protected, the seller gets to keep it. But if you void the contract for reasons that are protected, you get your money back. Next, we have the inspection contingency. This allows you to have an inspector go out and get a better sense of the status of the home. And if things need to be fixed, take a list back to the seller and say, hey, can you fix XYZ? They may do the repairs, they may give you a credit so you can get the cash back and fix it yourself. Or the seller could just say, no, we're not gonna do that, and they could void the contract. Another version of this contingency is as is with right to terminate. You can't renegotiate based on your findings, but you can safely terminate the contract, you just won't ask for repairs. I mentioned there was a general inspection. You can also have this if there's well water, if there's a septic system, if you want to have radon inspected, which is a colorless, odorless gas, if you have basements. There's many different versions. Next is the financing contingency. You may see different versions of this, whether you're getting a conventional FHA or VA loan or even USDA, but they all basically kind of say the same thing. You have a certain number of days for your financing to be approved, and if your loan gets denied within that window for any reason, you can safely void the contract and get your deposit back. After that is the appraisal contingency. This says that the lender will send an appraiser out. Almost every loan will need an appraisal. But you have the property appraised, and if it comes in at less than value, you can renegotiate the sales price down to match the appraisal or void the contract. You could also do an appraisal contingency with a gap, which says we will renegotiate if the price of the appraisal is too low, but we will pay whatever given amount over the appraised value. And again, if the appraisal comes in low, but you and the sellers can't reach an agreement, again, you're protected to void the contract. If you're buying in an HOA or a condo development, you may have some sort of protection to review the condo and HOA docs, and if there's stuff you don't like it, to avoid the contract. We have that here in Northern Virginia. I can't say that's the same for every contract across the country. There are more addendums and more contingencies depending on your given scenario, but these are the basics that cover pretty much any offer situation. Now, I mentioned these were contingencies meant to protect you as a buyer, but in a multiple offer situation, like we have in this competitive market right now, a lot of these protections are getting waived to make the offers more attractive and more guaranteed for the sellers. But again, every house, every scenario, every market is going to be different. I've had buyers this year already where we've had to waive everything. I have others, we got all the contingencies.